Welcome, and looking at gold on the 4-hour chart here. Because we've got this particular pattern here, this ABC here, we're looking for new highs above this wave A here. And of course, we would be looking at the 1300 here as the closest largest number. We can see that the market is in group 2 here. That's a supportive role. It hasn't found the 1272 and important as the support yet. It's just really got the first high above the level there, but it should do in due course and then move up and find support on the 1280 and continue to move up through there. The wave count that we've got here for this is that once again, there is a bit of a spike in here, but looking at this as wave 1 into here somewhere, wave 2, and this is all of wave 3 unfolding up here. So a wave 4 here and a wave 5 up through to here. We may get the extension in wave 5 because the market's expanding to the upside. So yeah, look, just a some type of corrective pattern through here. We need to keep an eye on the US dollar as well. I mean, if that US dollar has found support, then the commodities will suffer to the upside. The silver market here, just looking at this as a corrective pattern across the major trading level 2 here, the $2,000, the $20 on the full contracts. Once that's completed, should stay above the 1972 here and then move up from that point there. The copper market has met the 325 target. Now, as it stands at the moment, this can be counted as an A and a B and a C here as a wave 4. And if it is a wave 4, this may just be the first leg of it. So basically a larger A, B and C here before we see further downside. Yes, it can be positive as well, but we're just looking at this being, you can see what happened here on the bounce. We had the sharp move up and then the deep move back, and that's what we're seeing at the moment in a smaller version, a deeper move back. As long as that low stays in, then we really need to consider that there's possible upside there as well, and this A, B and C comes into play. But this A, B, C here can be wave 1, 2, 3, 4 and 5 down to here. I don't know that just yet, but that move up here does appear to be in 3 waves, which makes it a corrective wave rather than wave 1 and wave 2 here. So an A and a B and a C is a better fit. And also this market moving down through here, moving into the price territory of the top of this structure here, also helps it being a corrective pattern to the upside as well. But it's still early days just yet, and we need to see, because the move down through here is just is still in 3 waves. We don't have an impulse wave to the downside just yet. The other side to look at this too is that if the 320 becomes the retested resistance, then that also confirms the downside as well. While it's above this level, then there is hope for the material sector. But like I said, it will depend on the US dollar breaking lower or not. The oil market, look, what can you say? It's just doing its thing across the 100 here. Still expect further upside for this market. When we look at the Brent here, it's a little bit easier to look at. We've got strong 3rd wave here for the Brent, the 4th wave being pulling back, and there'll be a 5th wave moving up there. So this market here will pretty much, the WTI will pretty much do the same as well. Yeah, there's nothing much I can really say about this. It's just working across this level here, and there'll be, there will be further upside. It's just not sure how many swings there's going to be here, because wave 4 is normally complicated, and this may still be here as well in terms of an A and a B and a C to here before we see further upside. So either way, if you're long, stay long. Otherwise, we really need a good tested support on this level here, and we don't have that yet. The soybean market, I think the wave 1 structure up here that we're looking for is actually completed now. So now we can start on wave 2 coming back. So just looking off the close today, we can see that it's closed down lower. So that will help me confirm the situation, and it does as well. Yesterday we were looking at 1, 2, 3 and 4, and we're looking for 5th wave up through to here into, well, close to the 1340, the 1338 and so forth, and it does appear to come in now. So we can see that dramatic change in trend here, even though it's small, but it does give us enough evidence to assume that this wave 1 here is completed, and we'll be looking for an A wave, a B wave and a C wave back into 1300 and possibly even 1290 here as well. So we'll be looking for buying opportunities on this pullback, but we'll just allow there'll be a few sessions for all this to unfold. So it's likely that these markets will follow stock as well. So if the S&P 500 was looking to correct back into its B wave and ABC for the B wave, so the commodities can move in line with that as well. Okay, looking at wheat here. Now, we are looking at the possible low here, and I'll just sort of reiterate this situation here is that I don't know if this is a wave 4 pulling back up here, this wave 4 to here to the 38.2 retracement level of the 600 here, but once again, I'm assuming it's a low here, and we do have a nice impulse wave off here. Now, that impulse wave will give us another impulse wave here, but that's as far as it can dictate. So this is this impulse wave starting here. So we just need to so any stops in this market would need to be under this particular low here. But like I said, we've got to be careful. This is not an A and a B and a C wave folding here. So we want to see this third wave become really strong here. And we are seeing these two bars here quite strong, but we like a third wave here. But we need to see more of that. This can be up for 1 and back for 2 here, by the way, and then up for third. But we do want to see it build for the short term. We want that 572, 570 to stay in place. The corn market, once again, looking at possible low here, 2 ways of trading here using the weekly robo method, and the other way is just building in using the levels. But the thing here is that on the 4-hour chart here, that we've got it 1, 2, 3, 4, and 5 here. But at the same token, it can also be an A wave, a B wave, and a C wave here, and fail at the 450. So we've been building in positions here. So you've got the choice to take it at 450, 448. It's dropped off now, of course. But anyway, let's just drill in and have a closer look at this here. So what we were looking for here was wave 1, wave 2 on the hourly, all the way up for 3 here. Yesterday we were looking at the A and looking at the B, I think, and C's come in place now, so we can call that wave 4 in here. So we probably have to call this wave 5 in here now, because it has made a new high here, and we would need to look at this as wave 3 here, or wave C. So wave A to here, wave B, and wave C as such. So it can pull back into this area through here. Let me just have another look at that. 1, 2, 3, 4, 5. No, I've got that wrong, I think. This is just we're not there yet. This is still not here. This is just the third wave here. So now we'll look at this. Just bear with me a second. This was an ABC, but 1 degree smaller. So we'll be looking at this degree here. So we can just move these guys out of the way here for a second. And that can go into here. So that's what we're looking for here. So we shouldn't see too much of a situation here, but still looking for another high here, just another A, B, and C here, and then a move up through to here. So I'll just save that while I'm here. So yeah, shouldn't be too much problem. Should stay above the 435, and the more support we can get here, for 440, the better, because we'll get a larger correction at the 450 here, and we'll need that 440 there to be the support area through here. Okay, the orange juice, once again, to this particular market, we don't know if this is wave 2 here, or we're going to get wave 2 over here in terms of an A and a B and a C over here. but we've put it there, and as long as it stays above the 140 here for the time being, then we'll stay positive to the upside. But in positive to the upside, we've only got 3 waves here, okay? So it can terminate right here as such, and this is where it can fail. I've mentioned it before at 148, 150, and so we just need to be, if you've got money in this, it's probably a good idea to take that. On the positive side of things, we'd be looking for up for 1, back for 2, then up for 1 again, 4th wave here, 5th wave here. Back 50, 60% retracement level, staying above the 140, 141 area. And if that's the case, then we'll come down to here, and then we'll move up from here. But this moves down through here and takes out this low here, or the 140, 141 as a retested resistance. Well, using the levels, 142 as a retested resistance, clicks in the bearish bias from that point. So that's an early door escape door to look at there. Once again, it will just depend on the US dollar breaking lower or breaking higher. So we need to keep an eye on that. We'll just have a bit of a look at that here. So, we've been looking at the US dollar edging down here, giving a bit of strength to the commodities, but this is a block of support here for the US dollar. So, we need to be mindful of that. So any bounce here, push up through here would affect those commodities as such. All right, well, that's it. All right, cheers.